Alright, here's going to be a short video for Sunday, June 22nd, going into next week here. And let's take a quick look at the market breadth here, or the moving averages here. You got the four charts here, and we could start. Let's start at the bottom here. The stocks, the 200-day moving average, the percentage of stocks that are above the 200 moving average, and as you can see here, represented by the green here, is 45%. So 45% of the stocks and the S&P 500 is over the 200-day moving average, which is not good. That's still showing weakness, and it has gotten a little worse since last week. As you could see, it's starting to point downward here. We were doing better over here, but then we kind of lingered sideways, and now we're kind of going the wrong way now, below the 50% mark. So that's something to be a little concerned about in the major trend here. So we're still not out of the woods here. We're still battling all of this. Meanwhile, if we go to look at the 50-day moving average here, this one's a lot better. It's 63% of the stocks are above the 50-day moving average. This is where the institutionals normally like to come and pick up stocks. However, we do have the 3-day moving average above the indicator here, or the trend line. So it's still have a negative bias now. We do not want to see the red above the green in this case here. So right now the bears at the 50-day moving average is still a little in control. It is starting to flatten out a little bit here, which is good, but we definitely want to see it turn up to the upside here. We are over the 50% mark, which is good. So that area of it is good. Going over to the 20-day moving average here. And now this one's showing weakness. We got 46% of the stocks above the 20-day moving average, which is not good. We want to see that above the 50 as well. So there's weakness, but it's trying to pick up. The green is above the red, so that's good. It's just still weak. And then going for the short term on the 5-day moving average here, we do have the stocks starting to pull back to the upside here, and but still not strong enough in terms because of the weakness of the 20-day moving average. So we want to see, maybe this may be trading sideways a little bit, or we may be getting a pullback here. So but at this point here is a good time to start going through the watch list and start filtering out the weak stocks from the leaders here, and to focus on the leaders. Now I'm gonna go over now to the other guys here, the daily. So I'm gonna have to move this a little bit and switch over to the daily, reposition this, and here we go. We're on the daily. Well, actually, let's go the breadth of the comparing the SPY actually. So let's do that. So that would be the test number 2. Here we go. Not that one. This one. There we go. Okay. Now we're looking at the 5-day moving average again, kind of at a bigger. And as I just mentioning, it seems like we're trying to bounce up from that area. However, if you look at the S&P 500, the actual chart here, I have in the white line being the 9 EMA. That's usually what I use as the trailing stop. And you could see last week we did break below it, and on a different video I mentioned that if we close lower below this first red candle here, then we're probably going to show some weakness. However, on that Monday, we got the green candle went up, but the following three other trades we've broken down and we've closed lower than the previous red candle. So that is showing that there's probably going to be more downside coming in the next few days or in this week or two. So where can we go? Probably to this gap fill area at 565 area. So that's something to be concerned and to watch. We also got the RSI 14, MACD, and the slow stochastics, kind of the more common indicators that most of the people watch. And we do have the divergence still in place. We got a high here, higher high, while the indicator is showing a high here and lower high. Same with the slow stochastics down here and the MACD. So this may be why we're starting to pull back, because the indicators were kind of pre-warning us that we may be getting a pullback. So something to be defensive and watch very carefully. Now let's go into each of the indices here and see how they're doing individually. We're looking at the Dow, and you can see we've been in a nice uptrend here. Started trading a little bit sideways, got up to these highs up here, and we crossed right over. We tried to do a breakout, and we just closed lower the following day, and we've been closing lower since then. Now it's kind of a little strange. We got a short-term divergence forming here. It hasn't played out yet as far as a bullish divergence. So if we close it back above this trend line here, this new trend line, then the momentum could maybe continue back up. But meanwhile, this can continue to break lower, and if it does, then that would void out this bullish divergence and continue to go a little lower on this. So where can we head down to? Well, we have a gap fill here, but that got covered by this guy here. So it's going to be hard to say where we're going to be heading down further. Maybe down in this area here where we had some resistance. So it's just a matter of just keeping an eye on it. On the RSI 2 here, these dots here, instead of lines, I converted them to dots, color dots. We're in the red zone here, meaning we're oversold. This is kind of the danger. Looking for the dots to start turning into the green to look for the setups to go along. Let's look at the SPY real quick here. The SPY also showing some weakness here. You can see it tried to trade sideways, but now it's closing below the 9 EMA, or in this case I have it set at 10. 10 and 9 is pretty close. And we could see the continue down. We do have the gap fill down here. So just something to watch. Looking at the Qs, same thing. It closed below the 10 EMA, and last Friday it closed even lower, kind of confirming. So it's something to watch. Are we going to head down to the gap? Who knows? Maybe we'll just head down to this area here at the 511, 510. So it's just something to watch. I'm not the type of person that try to pick the bottoms. What I do is I wait for the bottom to find itself, and I get into the momentum. So if you look at the RSI 2, you can see we're in the yellow dot zone, meaning careful. We're getting some pullback. I would like to see it to turn to red, and then definitely then look for a close higher from there, going into the green dot zone. And we got the RSI 5 as well. Shows that it's dipped below the 50, which is good. That's the area that I like to see it start dipping before we get the bounce. And the RSI 14 here is above the 50 line here, which the momentum's still pretty good here, the longer term. IWM still got the inverse head and shoulder pattern. We thought we were going to get through this and continue on up, but you got that retracement, which happens. So we're now playing around down here. If we get a pullback, as long as we don't close below this shoulder here, this is still in play for the inverse head and shoulder. Just a matter of watching. And let's look at the semiconductors real quick. We had a ascending wedge, broke sideways now, and we're still above the 10 EMA as far as the trailing stop, which is good. So that's still showing a little bit of strength here. And the RSI, I'm looking, see, we haven't got into the green, or excuse me, the red zone here on the RSI 2, RSI 5. We haven't dipped below the 50, so I'd like to see a dip below the 50 for a better probability of the bounce up. RSI 14, which is the longer trend, is still positive. It's above the 50, so that's still good. Looking at crypto, IBIT, this ETF fund here, we do have an engulfing red candle here, and that's all happening below the 10 EMA as well. So that's showing a lot of weakness here. So I would not be surprised if we go down to gap fill here at the $55 level. And we are in the red zone here, below the 50 mark on the RSI 5. And on the RSI 14, we're right at 47. We just slightly dipped below. So we just have to wait for the bounce here. Looking at gold, it's been on an uptrend. It did break below the uptrend line, or the bottom uptrending line, but it closed right on it. So we'll have to see. Maybe we'll get a bounce, maybe back up to this uptrending line, and maybe up to the next high, or we're just going to bounce around in this area and then fall back down. It's hard to say right now. I don't have the very oversold as far as the RSI 2, so I'll just be patient and wait for it to turn red, like similar to right here on this candle, and then just look for a close higher, which we got right over here in this candle here for this short little pop up here. So it I'm just gonna let this skip this and go to the next one. USO, this one's been on a strong uptrend based on the news. I mean, as far as entering up here, that's you got more risk than reward. So I just gotta wait for the pullback and see if we get the next bounce up, or it's just going to continue down. As far as looking for a short here, we do have a high peak here and a lower peak here where the price, so we are getting a divergence forming here on the RSI 5, and on the let's check on the RSI 2. There's a 78 reading, and we are now at 77, very slightly. So if the oil continues to go up, then the divergence could be canceled out. So it's just a matter of watching. And because we're going into the summer, UNG, not saying that we're going to be using more gas, but this is probably where we might be getting near the lows for the summer, so getting ready to go into the winters. As you can see here, we had a nice little pop, and let me just adjust this accordingly. And on this green candle here, I saw it move up kind of within the take profit zone, and based on the small candle pattern here, I figured it'd be safe to get out, so I got out of there for a nice 8% move here, and now it got pulled back here. So we'll just have to watch and wait to see if we get a further pull back, or it may continue to go up higher. In this case, I just didn't want to risk waiting for it to bounce on down here. The UNG is pretty volatile little stock here. And then looking at the RSP, the equal weight of the S&P 500 basically kind of like trading sideways in this case here, and we have not got the confirmation of a closed lower low below the 10 EMA. So this is showing a little more strength if we uh, made all the stocks equal weight wise. So it's going to be interesting to see how that's going to play out. So it's just kind of neutral-ish. And that's about all I got for now. Anything new that comes up, I'll be happy to make a video and go from there. All right. Take care. Until next time. Bye.